Electric Israeli, and today I'm going to share with you the Tesla quarter two notes of earning and how it affect Tesla stock, which is now being hammered, plummeting. But we'll get to that in a minute. So this is for Q2, which was record delivery of 95,356 vehicles, more than 80% of them Model 3. But let's go to the highlights. Cash and cash equivalents are now standing at $5 billion, which is really great. And operating cash flow about $640 million. And Tesla reported a net loss of $408 million, including $117 million of restructuring and other changes. We'll get to that later on, having to do with a lot of infrastructure changes. Auto gross margin 90% in spite of reduction in vehicle, ASP, and lower regulatory credit revenue. On track to launch Gigafactory in Shanghai by 2019 and Model Y in fall of 2020. So like I said, in quarter two, 95,356 vehicles delivered. Record high of 87,048 vehicles produced. That is really great. Let's go through some of the highlights from the call, which I listened to actually. Autopilot and full self features. We all know it's now going to Europe and into China. And hence, someone is being worked on. It's going to be released soon to the public. It's now being currently in our early access program. And more importantly, stop signs and traffic lights features for autopilots are also coming too. Our new FSD, full self-driving computer, which is 21 times faster than our previous HW 2.5 computer, has been in production since quarter two. That is great. Model 3, like I said, to represent most of the sales, 77,634, and that is, like I said, about 80% plus of the Tesla sales. They are maintaining an average sale right here, it says, of $50,000 per car. This car does not have the greatest margins, and thus it explains the losses. Model S and Model X production continues to run on a single shift schedule. 14,500 vehicles in quarter two. Our delivery increased subsequently to 17,722. This is how many they produce, and this is how many they deliver. Gigafactory in Shanghai should open towards the end of the year. Talking about a line capacity of 150,000 units per year, and hopefully getting down to a target production of over 500,000 vehicles globally in 12 months ending in June 30th, 2020. Model Y, the most exciting news in this release. Production Model Y in the Fremont factory began in Q2, preparation for the Model Y production. Because there's a lot of overlap between Model 3 and Model Y, it's going to be a much easier, and according to Tesla, I'm reading here from the last line, Model Y will be more profitable to produce than the Model 3 for the high demand of small SUVs. Infrastructure, that is interesting. The tremendous growth in supercharger capacity, I can attest to that. I use them all the time. Interestingly, under the radar, this is almost under the radar, 101 vehicles for mobile service fleet, great, and 25 new store and service location, which is important. A lot of infrastructure that they had to lay cash in front. Back to supercharging capacity is now roughly 1,600 charging location worldwide. And skipping around to V3 supercharger, will drop to around 15 minutes. Deployment of V3 supercharging. I like the V2 as well. They're doing great. Also, another great news and surprise, energy, Powerwall and PowerPack deployment grew by 81% in the second quarter to 450 megawatt hour. Powerwalls are now installed in more than 50,000 sites. That is great. That is great. Solar profit deployment declined subsequently to 29 megawatt. That's not great. The outlook, to conclude this, and then we'll go to the stock. The outlook this quarter is about simplifying approach to guidance, focusing on manufacturing, expanding manufacturing footprint in new region like China, and later on he mentions looking for a site in European Gigafactory. I'm reading it right here. So Model 3 in China coming, Model Y in the fall of 2020 in Fremont. Still looking to deliver 360 to 400,000 vehicles this year. I think they will reach that. And additionally, expecting positive quarterly free cash flow with possible temporary exceptions, okay? Particularly around the launch and the ramp of new product, okay? We believe that our business has grown to the point of being self-funding. I'm skipping to the last paragraph. In 2019, expected about 1.2 to $2.0 billion. Reduction from prior guidance. We continue to find opportunities to improve capital efficiencies and shift cash overflow to future periods. This estimate includes the development of our main products on the timeless reference and expand of our supercharger charger and service network. So with all this interesting and most positive news, still Tesla has not figured out to make money and margin on the Tesla Model 3, even though the average sale of a Tesla Model 3 is $50,000. Let's take a look at the stock as of now, really literally as of now, close $4.71. But after hour, with the news of the Tesla earning, went by 11.2%, $29.18. Let me refresh this. Let's see if I want to give you, yes, $29.18. So it is really crushing. Great news for the short sellers and CNBC. They are having a party there. But I think that the biggest challenge is to try to improve margins on the Model 3, which sells the most. Having said that, it's great that they can continue, that they are continuing in the infrastructure investments, Model Y, Gigafactory, and all that. And I believe that eventually this will catch up and resume to profitability. I still have great faith. So that's that, guys. Thank you for watching. Any more updates you guys have or questions, put it below. Thank you.